Okay, guys, welcome to my screen once more. Um, this is the second episode of the Trading Insight series. Okay, guys, before we go ahead, I actually realized I made a mistake on the first episode where I was breaking down Eurocat, and please, you just condone with me. I'm a new trader trying to put myself out there, and I'm still new to YouTube, and I'm just trying to make my best. Hopefully with time we're going to improve. That's why we are here. So I just realized I didn't put the part where I had to ask you to like the video and subscribe to the channel if you like the content. Please do that. So without no further ado, let's go into it. Like, you know the drill, I'm going to redo the analysis again because you can see I've already done the analysis. So I'm just going to cancel some stuff. So I'll walk you through my thought process to where I arrived to that point. Okay. So first things first, you come to the monthly time frame. So now we're on the monthly time frame. Generally, what you want to do on the monthly time frame is to know the direction of the flow of the market. That's if your market is going down or it's going up. And from here, you can see that recent price action, this market has been going down. So let me try and see this trend line that forms up here. Okay. Let me try and adjust it up here. Okay. Anyways, the main idea here is that the market is going down. So now that we know the market is going down, what we are basically going to do next is to go down to the weekly time frame and do our analysis. So the weekly time frame, always try as much as possible to look at the immediate price action. That's always how I like to look at it on the weekly time frame. The immediate price action. So what's happening on the weekly time frame? So I can see something like a downtrend here. Cancel this way. Okay. I can see something like a downtrend here. Just about here. Okay. Let me accommodate more points. So this was probably a fake out, but I think this should be the correct trend line. But in case we break this trend line now, I'm going to adjust it to this point here. So, and just for more confirmation, that's in the case where we actually break this first trend line here. So for now, that's looked like it's not happening anytime soon. And we know on the downward trend, you have lower lows, lower heights, lower lows, lower heights. What do you expect next? A lower low. So what I always do is, first I want to investigate what happened in the past. I just come from this swing high to this swing low. Okay, so from that we can see that our Fibonacci held. It was between the 50 and the 61%. It held. with the bearish engulfing on the bearish engulfing. I don't tweezer with the bearish engulfing candle on a weekly time frame at a key level after touching a trend line. The thing is just screaming that it wants to go down. Just screaming, please, I'm going down now. So with that in mind, what should we do next? So I always say, if this is A, this is B, this is C, the next level target should be D. Ideally, I always say ideally, because the market is never ideal. Ideally, that's what the Fibonacci retracement, that's what the Fibonacci tells us. Okay, but in the case where we even want to fail and we actually try to reverse, or we don't attain this level, at least the market must tell us it wants to reverse. That's what the market always does. The market must tell us it wants to reverse, so it must at least attempt this level, retrace 100% before rejecting and start going up. So with that in mind, we know that the next level target is at least this point here, or we can still get into this key level since the market was from zone to zone. So we are in this zone, we left this key level. So the next key level we are looking at is this key level down here. Okay, but just be precautious. I say if you want to change this dynamics, at least we have to get to this point. Okay, with that in mind now, the market is pointing down that way. So you know that even in an impulse, like the market still moves in a trending manner. But let me come to the daily time frame and see. So the weekly has told me it wants to go down. The monthly told me it wants to go down. So let's see what the daily is trying to tell us. Okay. So first of all, this market came in here. Then what did he do? Started ranging. Okay. So what do you know about the I'm going to just bring you on. I'm sorry, let me come. So what do we know about the ranging market? The ranging market is that as long as you're inside the range, if you don't know how to trade, don't get in there. At least even if you know how to trade, don't still get in there, but it's tricky. Since you don't know where the market can turn on you. So in as much as I was expecting this market to go down here, so but we're in a range. I was saying, okay, there are two things that can happen when we're in a range. First, either we break up, or second, we break down. The weekly is telling us to break down. We are going down. The model is telling us we are going down. So the daily is in a range, still trying to know where it's going. So I just say, okay, when you choose your direction and you go, then I'll follow you. Mind you, the weekly was telling me this market was going down, and it's still telling me, by the way, the monthly is telling me the market is going down. So if this market happens to break up, I'm not even going to look at it again. So the only way for me to trade this market was if this market actually break down, and see what we did. We break down, guys. We break down. I say, okay. Normally, when you break down, you have to retest. So I think this is what's happening right about now. We are trying to retest this. So I'll not even lie to you guys. Let's just explain this. I'll not even lie to you guys. When this market breaks out, I took an entry about here. Was here. And with my stop loss, I think it was 70 pips. 70 pips. Yeah. Or something of this sort. Or 70 pips, and my target was 200 pips. So this will happen. So as you can see, like, this market took me out after giving me some profit. Took me out, but since I knew this market was going down, I didn't pay attention. While the market was going against me, I never thought it was even going to go that deep. While the market was going against me, what I did was I just let the trade run, and behold, this market was just going on. So yeah, I just risked $100. As of now, that $100 is gone. I'm just trying to keep it real with you guys. And okay, so I realized that this is what's happening. This market is attempting to go down, but it's attempting to go down in the trendy fashion, which is even better for me, because when this thing happened, I said I always like to do this when something goes against me, like when trade goes against me. I always come and investigate like what must have gone wrong. Everything was aligning perfectly. I was even in profit, and it just came down, took me away, and I want to come back again. I said, okay, what I did was I always do this. I don't know, but Fibonacci is one of my best tools to use. Fibonacci is one of my best tools to use. So after investigation, I saw that this is what might actually be happening. This market is actually retracing, even though it's still a pullback. Like for me, it's still a retest. This market is simply retracing into this Fibonacci. If you retrace into this Fibonacci, at this point, I think the market is about to, because this thing has been selling for 2 days straight from Thursday to Friday. This market just did this. It's actually the NFP that just stopped this bleeding. So if this market is going to start going down from here, we are looking at potential how many pips drop. From here, we are looking at potential 200 pips from here first. So is what is going to play out. I'm going to get back into this trade, but now there are 2 ways in which you can get into this trade. You can wait for this trade to come back here out of this range and take the trade out of the range that is from here to your stop loss somewhere there, and collect all these pips to the downside. Like This is actually a long-term trade. This is just for minor purpose. But if you look left, this is the overall target. This is the overall level we're targeting. So around 300 pips. That's if you want to be more conservative. Wait for a daily candle to come out close below this range, then now you can get in. But if you are very eager and you want to go aggressive, like, because I feel like this market can actually come again into this region, play around before coming down, and I don't even think it's going to play around. This market wants to drop, so you can take the trade from here. Like, just put a little skin just to know you're in the market. Fix even $100. Okay. So anticipate all these people to the downside. And for me, this is even a better entry position. In the case where this market has to play out, this will be a very good position for you to get in. So that's it for AUD/USD. AUD/USD, actually, me, I think it's a gold mine. It's a gold mine, just waiting to. It has already been discovered. Now it's just rest charting. So thank you once more. We are at the end of the second episode. Please do consider liking this video and do consider subscribing to the channel, helping me grow and encouraging me as I try to put myself out there. Thank you very much.